Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. As usual, let's take a look on the gold market. So yesterday it was interesting price action around the 1875 area, at the beginning of the United States session, that we need to take into consideration. And in general, as we said in our weekly report, market demands too much from the fundamental background to make the gold market go up. So as we said, market needs drop of the interest yields below 1%, 10-year yields. Market demands improvement of the total 1.9 trillion Biden spec, which probably will not be the case, and it needs it right now without any delay, while currently it mostly seems that improvement could be after the consideration of the Donald Trump impeachment and somewhere in the March, or at the most most positive scenarios could be somewhere in the end of the February. All this stuff with the delays and high interest rates, it makes the pressure on the gold market. That's what we have in the technical situation and in the very short term perspective. In the longer term perspective, as we said, we think that tectonic shifts, global shifts in the sentiment, in the fundamental background of the global markets, and we think that shift stands in favor of the United States dollar. So it means that currently not everybody understands that, but as soon as it will become more obvious, we see the acceleration of the downward action on the dollar rivals and some more evidence with this changing situation. So currently we have more bearish view rather than bullish on the gold market, and we'll consider the possible bearish patterns that could let us take position to go short. One of them is the butterfly that's already discussing. It's right here on the daily chart. But at the same time, as you can see, the validity of this pattern stands relatively far. It's 1956, so this area stands actually free for any gold price fluctuation. So if market today, for example, will jump for $100 per contract, this will not be the breaking of the major bearish context by far, just because the validation point of the butterfly stands above 1956. Well, and from that standpoint, it makes a bit not quite clear at what particular moment market could turn down. And that's why our strategy suggests some providing of some liberty to the gold market to fluctuate, and we could see what really could happen here. For instance, currently we are watching for the grabbers, and theoretically the wing of this butterfly could be steep as I put it here. But if for some case this will not happen and market will just jump up and form higher butterfly wing, in this case we just will be watching for another bearish context on a different level. That's all. So every time when market stands inside of this range, we will keep an eye on the possible bearish context. For instance, it could be A, B, C, bottom, XOP by some reasons, maybe non-farm proposal. This could push the price gold higher. We do not know what particular driving factor will be, but this still will be some kind of the garbage cheaper to sell. So something of that sort. This is our approach to the current situation on the market. But since our grabbers are still valid, we are mostly stuck with them and trying to trade based on these patterns. You can see currently market's going down. So currently we treat the chances on the gold to go higher is very low by the few reasons. First of all, recently you could see the collapse on euro currency and Great British pound, while the gold market has not supported it yet. So gold recently was standing mostly flat. This is first moment. Second, if you will take a look at the interest rates today, you could see right now they are returned back above this important support resistance area on the follow time frame chart, this upper direction. And here as it shows minor growth, this is 4-hour time frame chart, guys. So this type of the price performance, it's not supportive to the gold market. especially yesterday's return back in this trading range. It opened way for gold, for interest rates to fluctuate in this range where it stands previously, especially if we will see the breakout of this trending line. So you can see here we have the trend line actually, the market stands right now, right? And if market will break it, be prepared for the gold will drop. Actually, you could see on the gold market the same trend line on the lower time frames. I will show you just a few minutes later. So grabbers in general suggest drop below this area, these lows, these two grabbers, but actually we have here this also grabber. It's still well, it suggests drop below this area. And in general, guys, if market will not be able to break this area as soon as possible, this consolidation will take the bearish view, because on the market mechanics, how market behaves with this support, by the nature of this price action, it has to go up. We actually already talked about it. Just take a look again. If you even would like to treat it as a head and shoulders, although it looks a bit ugly, but anyway, left shoulder, head, right shoulder. Take a look what's going on. With the right shoulder in place, market returns back to the neckline, but it has failed to pass through it, and return right back down to the bottom of the right arm. This is a bad story. This looks bad, looks bearish, and it's more probable that we will get here as this downside breakout and acceleration. And that's what the trend line that I'm talking about. So you have the trend line on interest rates right here. The same trend line stands on the gold. They will be broken probably in the same moment, as you will see a rally on the interest rates. The same rally will follow here on the gold, definitely. On the hourly chart, market right now stands at the support because the trend line is also 1848. And if some reaction will happen on this support country, we do not see it yet, but some pullback could happen. 1855, 1856 is an area that you could consider for a possible taking a short position. If, of course, this pullback will not be accompanied by some important fundamental events, some speech, some representatives or somebody. If it will not have the fundamental background, and we will not see this type of action. So we would like to see some gradual actions up to that sort, pull back to the 1856. If this will happen, we could consider it. And finally, guys, that's the moment that I'm talking about. Take a look what has happened right here. Unfortunately, we haven't got our bread and butter because market opened right at the gap up. Although it returned as big down then, but anyway, potential for bread and butter has been destroyed. But anyway, currently, this type of action, take a look what has happened. This big seller's pressure stands right around 1870. And every spike here was reversed back, and the seller steps in, doesn't let gold proceed upward action. That's bearish, and that's confirmed our overall view on the gold market in the short-term perspective. And as we said previously, the drop below these lows first, 1830, will trigger the chain reaction. So because all lows have the relation to each other, break of this area erase the basic sharp of the ABCD pattern, erasing C point, which makes it not valid anymore, and it means that market will be aimed on the taking out of these lows. Taking out of these lows means drop below your pivot point and erasing last opportunity for a gold to reverse position to the upside and erase the chance for these large head and shoulders. It means that taking out of these lows and so on. So that's why we easily could reach the 17 even target of the butterfly. So you can see the big game still stands ahead, and current is just the starting point of that. Let's keep watching on interest rates, keep an eye on what's going on the hourly chart with the grabbers. Let's see what will happen this week, especially on the front payroll release.